Forex trading is like gambling. I've heard that so many times I lost track of count. It's not how I see it. It's not what I think about it. And I'll share my point of view in this video. My name is Lord Loyens. I'm the creator of Black Bear Dog Trading, with which I try to show you, teach you, guide you how you can trade Forex in a way that you earn profits consistently, use these profits to then enrich you further financially. So, Forex trading is gambling. Well, it all depends. It depends who is doing the trading. If you go about it willy-nilly and you just click buy or sell without care or thought, well, mathematically speaking at least, you have a 50% chance of being correct. So, and in that case, yeah, I guess Forex trading is like gambling. It's like you're going to a casino and you just put your money down, and regardless of what game of chance you play, be it blackjack, roulette, even slot machine, doesn't matter. Yeah, you're going to win some, you're going to lose some, and it's usually made in such a way that when in the beginning, you'll win some. It's called beginner's luck. And the casino actually grants you these winnings. And a funny thing happens. You start to play with the chips that are laying in front of you. You start to continuously kind of flip through them. You start to feel good. You become a little bit less organized, a little bit less focused. You become a little bit more risky. You make a few greater bets. And then the casino jumps on you and takes you for everything you got. Well, that's not how it goes with Forex trading. I mean, Forex trading takes a similar route, but that's not how it works. I've said for years, and I stick with that until my dying day. Forex trading is a skill. That's right. It's a skill that can be learned and mastered by absolutely anyone. No high IQ required, no PhD in whatever, quantum physics, no math wizardry, nothing. Just a willingness to learn, apply, and rinse and repeat, stay focused, and realize a few things. And I already mentioned one of the things you should be contending with when you want to trade Forex, or if you trade anything for that matter. The money you put in your trading account, regardless of what sum it is, 50 bucks, 100 bucks, 5,000 bucks, doesn't matter. Consider it gone. The moment it goes into your account, your trading account, you don't have it anymore, gone. That already will alleviate quite a bit of stress. Number two, accept that you will have losses. It's part of the game. It's part of the nature of the game. Of course, the goal is to have fewer losses and make more profits. Obviously, it doesn't make sense to be in this game. But the fact is, accept the fact you're going to have losses. Number three, accept that these losses come from your startup balance, not your overall trading account. And this is where I am different from any trader or most traders out there. I don't trade to create large account balances. I don't trade to be able to trade larger lot sizes. I trade with one intent and one intent only, to make profits and keep these profits, all of them. So based on that, you then develop a strategy that you test out, that you fine-tune and perfect, and over time you have something that actually works, and then you stick with it. And so trading Forex does not mimic in any way, shape, or form gambling at a casino, and I want to emphasize that. And I'm going to in fact prove to you that if you trade Forex with a gambler's mindset, yeah, sure enough, you lose money and you lose it quickly too. Case in point, watch this. This is from this morning. Right here I have the Euro USD, and on this side I have the USD JPY. Check out my trading result for today. Right here, what happened here? I thought I clicked on it. Let's try this again. Here we go. Check out this. A massive whopping loss of $512. And I lost it at a pace, although these are 15-minute candlesticks. So 1, 2 is 30. In 45 minutes time, I lost that money. By the way, I wasn't sitting up here. I had my stop loss right here at this level. And when I entered the trade, I was right here at this level. I knew it was going to bounce back, but I went in there intentionally to prove a point. And the point is, yeah, if you go about it without paying attention, you just trade willy-nilly, you don't pay any attention to anything, then the end result is you will have losses. And sure enough, you are gambling. Right here is when Powell announced that we are close to not having inflation anymore, but we don't have inflation. But we're not done with it yet. We still have some inflation. That was the result of this candle. The euro went down massively. Look at this size. What do you think happens when you have just a giant candle like that? I mean, boom, at lightning speed going down. Well, it's going to retrace, and it always does. It never fails. Sure enough, here you go. But what happens when you get that? And now you get other news saying that the euro is on a bounce back and it's doing better and it's reached its lowest point. Well, again, anxious traders, they jump on that bandwagon, and that's what you get right here. And so sure enough, my stop loss, which was set right here, went completely, it bypassed it twice the height. Hence the amount of 512, a loss, losing trade. So the point here is volatility when trading is good, but super volatility is not good. Don't trade when the market all of a sudden goes like this, like this, like this, like this, and all that happens within a matter of an hour, hour and a half time. This right here is frantic trading. It's based on news. You never want to be a part of that. You want to wait until the news has settled in and serious traders are starting to come into the market, and the market, there's still volatility going on, but the market starts to become more stable. Well, how do you know when that is happening? Well, we have a prime example. You see that right here. The market is now slowing down right here. So all of a sudden it's no longer like this, but all of a sudden it goes more like this. And then from here, it will probably make either a gradual move back up or possibly a gradual move back down. But it will be gradual. Volatility is still there, which is what you need to do some good trading, but you don't need craziness like that. This is what Forex trading is about. It's a skill that you learn. It's a skill that you master through practicing. It's a technique that you understand. It's just like a mechanic. Bring me a car, whatever brand, make it is, and tell me to overhaul the engine. I wouldn't have a clue what to do. And in the meantime, I go and get started on overhauling your engine, and when you come back, the car is a total disaster. I don't know how, I'm not a mechanic, I don't know how to do this. But ask me something that I do understand, ask me something that I do know, ask me something that I do have thorough knowledge about, and I'll tell you exactly how and what. Forex trading is my thing. I have extensive knowledge in that. I've been doing it for 15 years with 4 years of nothing but struggling. I've done a ton of demo trading. I've done a ton, my goodness, of research and watching videos and learning and practicing and falling flat on my face and getting up again, and I mean the list goes on. And proof is in the pudding, as they say. Well, look right here. Let's go to the USD JPY. Same thing. At some point, market was just humming along. It was consolidating. It was flat. Then, based on the news that Powell gave, which sent the euro in a nosedive, the USD went sky high. And here you get the same one giant candle. It's not the time to trade. Wait. Sure enough, here the market starts to flatten out again, consolidating, and based on here, we will now have probably a move coming up again. The move can be up, the move can be down. We'll have to wait and see where it's going. This is how you trade. This is what you do. Why do people jump on something like that? Well, it's because, in my humble opinion, Forex trading has gotten a bad rap. And the bad rap is that you can make an awful lot of money very fast with a little bit of money. It doesn't work like that. You may have a lucky trade once in a while that you were lucky and you happened to be right here and you caught this ride, and by the time you got done here and now you made it down. It's possible, of course. All things are possible. But, you know, that's not the norm. The norm is that you just relax and learn to read what the charts are telling you, learn to read what the market is telling you, what price is telling you, learn to understand what happens when there is a sudden news coming out that people, banks, traders, institutions weren't expecting, and know what the consequences are of that. And then just relax and wait for the market to settle down, and then start looking for trade opportunities. You do that, then you don't suffer these kind of losses. In fact, if you look at the rest of it, I had, not counting this, I've all included, I had 13 trades total. In fact, let me stretch it all the way out. Oh, that's the wrong window. Let me get this one here. Yeah, there. Let me see how far it goes. There you go. And every single one except this one right here was a $69 loss, and that was my own fault. I actually forgot that I was in a trade, and when Windows updated and asked me to restart the computer, I said yes, and then I let it be. That was actually, but my stop loss got triggered. Other than that, look at this. I'm not counting finances, obviously. Financing is interest that I earn on it. I'm obviously not including that on actual trade. 1, 1, 1, 1, 1, 1, 1, 1, and 1. 13 trades, I had one real loss, one intentional loss right here. So it goes to show you that you know what you're doing. You keep your head to the ground, to the grindstone. You keep your eyes on the price. You don't let yourself be overwhelmed by all these hypes. Do this, do that, do here, do there, and you'll earn millions in a heartbeat. Just be realistic. Stay grounded. Stay true to yourself. Stay true to what works, and you'll do just fine. And if you take it that way and you learn the rules of the game and you practice, then you'll find out Forex trading is not gambling. Forex trading is, like I said, an actual skill that anyone can learn and that anyone can become good at if you're willing to work on it, if you're willing to quote-unquote pay the price. Be tenacious, spend the time. And then it doesn't matter if you do this part-time and you keep your regular 9-to-5 job, you will still be profitable in Forex because you've actually learned a skill. And that is what this video is all about today. So look forward to learning Forex trading, and I'll see you in the next video. Take care and God bless.